now with some strategies for earnings season. Hello, Toni. How are you today?
Hey, Toni.
Hi, I'm good. How are you guys?
Good. We're so happy to have you here as always.
Thank you.
You're going to teach us something about earnings plays today.
Well, yes, as you mentioned, yesterday kicked off the unofficial start of earnings seasons with Alcoa announcing its earnings after the close. And one of the exciting things about earnings season is that this brings with it a great opportunity to get a lot of momentum strategies going, where we can find setups in the morning, even before the opening bell, where we know by looking at the charts that there's a strong possibility of really great trend day action in a lot of these different securities. And the one thing with earnings season is that even though we have these news type of plays pretty much any time in the market, earnings season really gives us the opportunity to have a lot more opportunities to choose from. And there's a couple of strategies that you can look for where you can identify a security based upon the type of opening gap that is having as a result of earnings to learn that this is going to have the strongest possibility of having great trend day action or at least strong intraday follow-through on the gap itself. Now, Alcoa is actually a great example this morning, and I'm going to try to pull up my chart here to show you guys. This is the first time I've done this, so wish me luck here. I want to show you what Alcoa looked like on the intraday time frame today, as well as showing you what it looked like on the daily time frame. Now, what we're looking at here is a 5-minute chart of Alcoa, and this shows you the gap down this morning. And basically, it was trading in this uptrend channel on a daily time frame. And we're just seeing the last day or so of this. And then it gapped down this morning. Now, Alcoa, the gap on Alcoa, let me actually show you the daily time frame here. The gap down on Alcoa is great because it is only a gap that is about an average day's range. Here, you can see it over here. And here's that uptrend that has been in place since January. And basically, the gap down took it through that lower end of that trading channel. And by gapping by only about an average day's range, we have the stronger potential of not only intraday follow-through, but also the potential for multi-day follow-through as well. If it gapped more than twice an average day's range, the chances are higher that it would have fallen into more of a trading range, or it could have even pulled back and filled in that gap to some degree this morning. Now, if we drop back again and look at that 5-minute time frame, what we can see is that there was a great change in momentum intraday here going into this afternoon. We had that initial follow through on the gap coming out of the open, and then this trading range. And then in this last segment of the trading range going into 12:30, there's a slower momentum move on the upside. And when this happens, it gives us that strong breakdown trigger where we get a great sell strategy setting up. And a stop on this type of strategy is just over that last pivot high within the trading range. So basically, when we're looking at earnings strategies, what we want to see are stocks where we have a gap that is less than twice an average day's range. It's breaking out of a daily trends channel. This could be a pullback into like a 20-period moving average or even a 10-period moving average. It's breaking out of that trend channel with this gap. It's a larger than average gap, but it's not more than twice an average day's range. And then you drop down and you look intraday for continuation moves in the direction of the gap, such as this breakdown strategy that we just looked at in Alcoa here. So this is something where you're going to see a lot of these types of setups over the next couple of weeks, particularly as earnings season kicks into high gear next week.
Excellent, excellent. Are you going to be making any plays in particular during the earnings season? Oh, this is Kevin, Toni. I know that for me, ISRG is one of the plays I like to put on my list.
Oh, yeah. A lot of these big name stocks, I'm always following them to see what they're going to be doing. I look at them after hours. I don't usually trade a lot of the after hours activity,
Sure.
but I will follow them and see, where they're going to open up into the next day. And then I'll keep them on a watch list and follow them throughout the day. So these are great things. You can look in pre-market gainers and pre-market losers. So you might not even know for sure that it had earnings that day, but usually they'll pop up on those pre-market gainer and loser lists as well.
Well, the price action typically is why we're even there in the first place, and they'll be in your morning momentum plays for sure. And,
Yes.
ISRG typically does 10% with the price action on the earnings. So it's a big mover and shaker, whether you're going to do a fade the gap or a fill the gap like you're taking, or maybe a straddle or something like that into earnings are certainly worth the pop.
How do you research to find out which ones you want to do?
Well, the night before, what I'll go through is I'll look at all of the stocks that are coming into earnings the next day. And I'm looking for things that are trading in a nice trading range or a nice trading channel. Like Alcoa was trading very nicely higher within a gradual uptrend channel on that daily time frame. And then this gives me a list to go with where if there are earnings that gap it out of that trading channel, those are going to be the stocks that have the strongest potential for multi-day follow-through. So not only giving me great intraday setups, but also the potential for swing trades as well.
Interesting.
Okay,
Very interesting.
Yeah. So I guess to reiterate, Tony, basically you're saying if as long as it stays within twice of its average true range, in this case, AA has about an average true range of 42 cents. Let's just say 40 cents for round numbers.
Yeah.
As long as it stays within that 80-cent expansion to the downside or the upside and to the downside in this case at the open as a gap, the fact that it's going to bounce and do a little bit of that curve action, start to give that afternoon sell-off if it does, and make lower lows. Whereas if it expands way too much outside of that, over twice as much, the chance for it to try to fill a gap is greater. And it probably just going to channel trade the rest of the day with no real enthusiasm to the upside or the downside.
Well, yeah, I mean, the chances of it attempting to fill the gap often depend upon where that gap takes place in the larger trend. If it's a breakout from a larger trend channel, let's say Alcoa, for instance, had gap down this morning by $1.20 or something, then this is higher than that twice an average true days range. And if it had done that, the chances are higher. It would have just traded in more of a channel. It might have had some initial follow through right out of the open where we get like an initial drop in the first 5 to 15 minutes. But the chances of it having decent follow through after that would have been greatly diminished. It probably would have had most of that action in those first 5 to 15 minutes of the day and then basically been stuck the rest of the session.
Right.
Thank you so much, Tony. We appreciate you joining our show today. In our last few seconds, we're going to let Kevin take it away. We want to see who he's putting on the spot today.
Well, folks, in Dallas here, I've got some news for you. Walmart stores' first wave of price rollbacks don't look overly threatening to other grocers. That's right. Walmart's rolling back the prices on their groceries now. They're famous for doing the rollback. They compete with Kroger, Tom Thumb, Costco, Whole Foods Market. And in the Dallas area, folks, they've actually been taking measure of this, they being Morgan Stanley. So in Dallas, everyday pricing by Walmart, Kroger, and Tom Thumb on 50 common grocery items such as milk, fruits, and vegetables remained steady. Walmart was 14 to 16% lower than their competitors. And Target's in the game as well because Target is also competing. But their price check concluded that the rollback signage in the stores was certainly accounting for their model. So on the spot today is Michael Duke, the CEO of Walmart, as Walmart takes over the world.
All right. Thanks a lot, everybody. On the spot is out of time. The closing bell is straight ahead, so stay with us.